Welcome to the Swing Trading with Cycles channel. It's January 10th, 2023. We're going to do an update on precious metals today. If you're new to this channel, I'll give the short version is we focus on price action so that we can understand trend, because prices trend. Sometimes they trend higher, sometimes they trend lower. It's not about predicting the future. It's not about having some kind of edge, knowing more about fundamentals. You can try to do that and good luck, but I think it's actually much more simple and straightforward, data-driven, to try to understand, is price trending up, so I want to get long, or is price trending down, so I either want to get out of the way, or if I'm aggressive, I want to get short, or is it consolidating in some kind of range, so I probably just want to stay away. And you do that on multiple time frames, on the monthly, on the weekly, on the daily, on longer charts. And so that's what we do on this channel across all asset classes. We're going to focus on precious metals today, and precious metals are at a really important point. I think there's a lot of confusion out there, and I want to just try to simplify it for folks. We try to focus on things that are simple, repeatable, and effective on this channel. And so if you're new to this channel, definitely consider subscribing, like the video if you find value in the content. And there will always be a pinned comment that will have some background info for you on cycles analysis, how to identify swing highs, how to identify swing lows. One thing I'll say about cycles is don't get hung up on the word cycles. You can replace the word cycles with time period. We're only using the cycles to categorize the price action, not the other way around, right? Not the other way around. We're not looking at quote unquote arbitrary cycles and then trying to shoehorn the price action into it. No, that is not my approach. And so in this video, we're going to first review the long-term cycles for gold. You hear about this 30-year cycle. What is that? Is it real? What does it really mean? How should I think about it? Again, do not get hung up on the word cycle. You'll see in the chart, it's math. It's just simple. From swing low to swing high to swing low. And then we're going to look at the current cycle counts. We're going to look at gold, silver, GDX, and then we'll look at a few ratios. Miners versus SPX is one we haven't looked at before. So the gold miners versus the S&P 500. Very telling what's happening there. And then finally, we'll talk about how to quote unquote sell the top when the time comes. How to, in a data-driven way, try to remove emotion. Like how do we get out as early as it makes sense to get out, right? Without waiting for a moving average crossover or any of that other stuff that generally is going to get you out of the trade late. And so let's jump into it. We'll look at the gold long-term cycle first, the 30-year cycle. So I'm just going to draw these lines. So a cycle is really just, and again, there's that background info in the pin tweet, but a cycle is really just a period from swing low to swing high to swing low again, right? Which is to say, a cycle is measured from swing low to swing low, but in between the swing lows, there's going to be a swing high. So to be specific in this case, this is your swing low. So that's your low. I'm going to just draw this line so it's super clear. That is your swing high. That 13 up there means that's year 13. So that's another way of saying that is the rally, the uptrend lasted for 13 years. And after that 13-year rally, we then trended lower, right? And that didn't end until year 32. And so you can do that easy math. 32 minus 13, right? If we rallied for 13 weeks or 13 years and the whole thing was 32 years, then the total is, then the decline lasted for 19 years. So pretty ugly, right? You know, you have a 13 years of up and then 19 years of down. This is just a simple price action structure. It's the same thing that you would see on a daily chart, a monthly chart, a weekly chart. It's the same thing, except these are yearly candles. Each candle is an entire year of price action, right? And then after, so this is your low, that's your other low, and this is your high. Your swing low, and the swing high in between. So you can think of that as one cycle that went a full 32 years. And again, the 30 part is, you can think of that in quotes. It's not ever going to be directly specific, down to the exact number. Like that's just a shorthand, 30 being an approximation. So then from this swing low, which again, take a look at that video to understand that in detail. This is the lowest point, right? From this swing low, we then rallied. We made this high. We came down, made a higher low, and then we made another higher high. And now we've been kind of consolidating, right? So if we're thinking about this same structure here, that was around 32 years, this is a similar structure that's potentially setting up here. Now, is it going to be 32 years exactly? Who knows? Who cares, actually? Because we're watching the price action. You didn't need to know this was 32 years to see, like, oh, crap. Once we made a swing high below the low of that year, and this year is what? That's 1980. Let me just change those lines to make sure that we can all see them. Right? Once we made that low, you didn't need to know about the cycle to know, oh, we just made a lower low in 1981. We made a lower low below the low of 1980. That's bad. And as it turns out, that started a downtrend that, again, lasted for 19 years. And so we've had this rally, and then we made this higher low, and then we made this high again. So if we think about this whole thing as a rally, like forget that this little decline here, that was 21 months. So in the same way that this rallied for 13 months, or excuse me, I keep saying months, I mean years. These are yearly candles. And I'll get rid of this sign here. Okay, so that means that, and I'll get rid of this line here. So that means, again, our high so far has been year 21, which was the year 2020. And so if that was year 21, this is 2021 was year 22, 23, and this is currently year 24. So again, doesn't mean this has to be exactly 32 years or even 30. But the point is, the same way this was a swing high that led to this decline, this is a swing. Like, so there's going to be a swing high that's going to lead to a bigger decline. And you can say, well, wasn't this the swing high? Maybe. But then that means there's going to be another one in the future. The point is, you can't escape long-term cycle declines. That's just what price does. Price moves from swing low to swing high to swing low. And that happens on all time frames. In this case, this is just the largest time frames. Again, so if you just simplify, it's like this, then that, and then you expect something like this, and then that, right? So just to be clear, what some of the cycles analysts on Twitter will say is the year 21 was the top for the 30-year cycle. And so their expectation is that this thing grinds its way lower to a cycle bottom, maybe somewhere around 2029 or something like that. Again, you can quibble over the timing because no one can predict that. But what you can't quibble over is this on year 21 is so far a high. Now, here's an important point, though. It's not a swing high yet. This became a swing high, this 1980 high. So the low from that year was $453. And so once gold moved below $453, which happened in 81, that became a swing high. So in this case, we would actually need to move below 1451.41, which is not a coincidence that a lot of the low targets, have 1450 in their sights. And it's totally possible that we do get there. But my guess is that we probably at least make another all-time high at some point before, and again, let's just count this out, before we get that like long-term cycle low, which just for argument's sake, let's just say is 30 years. So that would put the low at around 2029, right? And so like I find it hard to believe that gold isn't going to make a new high between now and 2029. And again, a new high being a new high above the all-time high made in 2020. So that is, and this is the gold spot. This is gold spot 2075, right? 2075. So basically 2100. And on top of all that, keep in mind that within these longer term cycles, there are shorter ones as well. I mean, that should be really clear. Like, that is a cycle low. That is another cycle low. That is another cycle low. And now we have one more. What is that? That puts us on year 7. So my point here is that within the 30-year cycle, there are these shorter cycles, right, that are like about half of the 30-year cycle. So this period here. So just to be crystal clear, that's this rally to this decline. And then you have this really bearish cycle, which rallied very little. Like it only rallied up to here and then just declined from there, right? And then you have this cycle, which had a massive rally and a really tiny shallow decline, right? Like very little. And now we have another cycle that we're basically in the middle of, is what I would contend, right? We've gone up, and now the question is this the top and we're actually going to roll over? Or are we still going to make a new high in this longer? And you could call it a 15, call it this, I'm calling it a 16-year cycle. Some of the cycles are 14 years. One is 18. Another is 16, I believe. So you can kind of, like, again, it doesn't mean there's any kind of special thing controlling price around these periods of time. It's really just a structural thing, if nothing else. I mean, like, again, you can see it on the chart. This is all measured from swing low to swing high to swing low. And you've heard about the 8-year cycle. Well, that's just it. That 16-year cycle is actually just 2 8-year cycles. So the 8-year cycles combine to make the 16-year cycles, and then 2 16-year cycles combine to make the quote-unquote 30-year cycle. That's the way to think about it. And again, don't get thrown off by the word cycle. You can easily replace it with time period. So now that that's out of the way, I wanted to go through that so that is totally clear for everyone. Let's get into the actual counts as they stand right now. So the daily chart we'll start with gold. And so for the daily chart, this thing looks like an absolute mess. I mean, it's day 48. You can't really, I mean, like, you could say, like, this is clearly a low, but it's so early, it's hard to say that this is a daily cycle low. And so at some point, this thing is going to correct. As I've said in previous videos, there's no other way to kind of put it. I mean, this kind of steep angle of ascent just can't sustain forever, right? I mean, you could call this whatever you want. It's a rising bearish wedge is what you probably, right? Like, at some point, this thing is going to collapse, and we're going to need it to hold a higher low, as always. And so we'll look at the weekly chart, and the suspicion is that when this collapses, it actually may trigger a weekly cycle low. Again, that weekly cycle low will need to hold a higher low. It'll need to be relatively mild, but I think the writing is on the wall that at some point this thing has to correct. But it's so we've been rallying for 48 days, and you can see going back to like the COVID rallies, right? You know, even then you had, the longest rally you had was actually 23 days, which is interesting. So we'll be watching this pretty closely. So that's the daily, day 48. It's going to print a DCH at some point. And again, this is definitely not your sort of classic gold cycle, which usually lasts around 33 days, where obviously the rally here itself has lasted for 48 days. So that's pretty amazing. If we think about the weekly cycle, and this is a little bit of a triple bottom here, so you could kind of pick your poison and say, oh, well, the weekly cycle started here, or it started here. As I'm thinking about it, this is actually the low, and this is the low from September. This is the low that marks the potential 8-year cycle low. That's why I have it labeled as such. And so if this is the low, if this is the 8-year cycle low, then the weekly cycle has to start from here. It can't start from here or here. Like, that's not really up for adjustment, if you will. And so if that's the case, it's week 15. So it's not super early in the daily cycle. We've already taken out this swing high. We're taking out this swing high here. And who knows? Are we able to, like, what we would really want to see is we want to see a move above that, right? Like this last area. I mean, really this, which is basically the last, got us really, really close to all-time highs. This is obviously a ways away. And so having taken out this swing high and this swing high is already pretty good. We maybe make a run at this before we move into the weekly cycle decline. And that's nothing to be afraid of. It happens. Weekly cycle declines are just a normal thing. Notice the 200-week moving average. You can see it's now kind of clearly moving up, and you have our 10-week moving average here, which is the blue line. And so you would expect, at the very least, if you just really, really high level, we're going to cross below the 10-period moving average. In this case, the 10-week moving average. That's going to happen. That happens with price always, because price retraces, and the 10-period moving average is a short enough moving average that price eventually has to catch up to it. And then if you think about the monthly cycle, the monthly chart, this is that low from September, the potential 8-year cycle low. That would be on month 83. The previous 8-year cycle bottomed on month 86, so very kind of similar. But the one before that actually didn't bottom until month 110, right? So obviously a lot of variability there. It's really just a way to kind of estimate things. But look at this bullish chart. This is like a V-shaped recovery off of. Now, still has a ways to go, don't get me wrong. But I mean, that's pretty beautiful. But it's going to have to correct at some point. Like something like that maybe, right? That's not something to be afraid of. It's healthy. It's natural. If we're going to have a 50, also think about the fact that this last 8-year cycle rallied for 56 months. So if we're going to have a 50-month rally, we're only on month 4, right? This is month 4 potentially. So we're going to have pullbacks on the monthly level even, but that's okay if we're going to rally for like 50 months, right? Which I actually think we're going to rally for a lot less than that, because I suspect this 8-year cycle is going to be left translated so that we have the decline into the 16-year cycle. But that still would mean at least a year or two of an uptrend, which you can obviously make a good amount of money on. So that is silver. That's gold. What does silver look like? So silver is a little bit clearer on its daily cycle. So it made a daily cycle low here, whereas gold just kind of kept running up, right? That was day 26, pretty short decline after a day 22 top. And now we've continued to run. It looks like we've topped out on day 31 of this new cycle. Is that 31 days? Let's just double check. Yep, that's right. So 31 days, and we're here at day 36. And I'll zoom in here, and you can even see the little uptrend, the little downtrend that's developed, right? So we made this high, and then we made this low, and then we made this high. What does that high look like to you? That's right. It's a lower high, right? We would expect the next move is a lower low below that low, like below this. And then it's a question of how long does the downtrend last? How deep does the decline kind of take us? I would say as a general rule of thumb, you want the declines to hold. Above or the high from the previous cycle. So we topped out here. Actually, let me just draw a vertical line there. So theoretically, you'd want to stay above, call it the $23 area. Or is that? No, $22.30, more or less. We could obviously dip much lower as long as we can recover into an uptrend. That's the most important thing. And similar to gold, we have a swing low on the monthly time frame, September. And so we need to stay above, in this case, $20 even for that swing low to remain in place. Again, that's a swing low in September, just like gold. And as I've tweeted before, I do think it does look like September was a turning point for the metals. And as we think about the weekly cycle for silver, we had our high on week 18 last week, and we're now an inside week, to be really clear. We're just inside the range from last week. So the low from last week was $23.12. If we drop below that and we close the week below that, more importantly, that makes week 18 a swing high and our potential weekly cycle top. Now, please do notice that going back to 2020, so almost 2 years, or more than 2 years rather, the longest weekly cycle advance we had was 20 weeks. That was the weekly cycle off of the COVID bottom. This rose 155% in 20 weeks. And then we had a decline for 7 weeks into a week 27 low. And so it wouldn't be crazy if we kept running for a few more weeks, but it would be unrealistic to expect the rally is going to be much longer than, let's say, 20 weeks, because that was literally the most bullish cycle silver has had in the last, 5, 6 years, right? You can see the rest of these counts, right? You had this cycle at 18 weeks, but obviously still not a ton of upside, right? You had this one at 21 weeks, actually. So 21 weeks. Platinum looks like it might get to week 22. So, and if we think about what week that would actually be, if we got to week 20, that would be the week of January 16th. Interesting. You could see a world where we actually run all the way to the week of the 22nd, week 22, because that would actually coincide with the FOMC meeting, right? That would be a logical catalyst to create a top and then a move down into a weekly cycle low. But the point there is, at some point we are going to get a weekly cycle low. It's going to be a period of decline for a few weeks. Not something to be afraid of. It's something to anticipate. be aware that it's going to happen and potentially take advantage of it on the other side when we get that swing low, like this swing low that caused this rally, right? And so that is the picture for silver. We'll move over to GDX, the miners. And so you notice everything has different counts right now. Things are kind of moving to their own rhythm. So GDX appears to have made a daily cycle low back on December 19th. We've now been rallying. We topped out on day 13, which was yesterday, but this is a pretty bullish candle. It's still inside. The high from yesterday was 31.97, so we need to get above that, and we need to stay above 31.25. That was a low, which is to say this is just an inside day, just like just like we talked about. Oh, we actually poked below the low. That's important to know about. So we poked below the low of today, so we're setting up for a bullish outside candle on the daily chart. That's important to know about. And it's not that late in the daily cycle at day 13, and it's week 15 in the weekly cycle. So this tells me that you could easily see gold run several more weeks because GDX is only on day 14 of its daily cycle. But of course, we have the CPI print in a couple days. That's going to be momentous for the markets. And you can see this daily chart, or excuse me, this monthly chart here. We even have these little red months in between, which are nice little pullbacks, which is another word for higher low, right? I mean, that's not super healthy, but then you got to do this. You get that little higher low. I mean, that's looking nice and healthy, right? So that's GDX. And then let's look at a few ratio charts. We'll look at the gold to silver ratio. And so we'll look at the big picture chart for that one first. And the background on this one is when this is rallying, it's positive for precious metals. Silver is doing better than gold. Important to note, though, we're trying to make a monthly swing low, which would mean that gold is outperforming silver, and we can see that, like, gold is making new highs and silver is beneath a swing high. So this is important to watch. A move above $80.20 makes December a swing low for this thing, for this ratio, which is generally bearish for precious metals, right? We do have a top on what looks like a top on month 19 of this longer term cycle, but as I kind of talked about before, anything can reverse. And so if we get a few more candles that start to look like this, right, you could see a world where, I don't think that swing low, I don't think this swing high is going to hold anymore. And we'll be able to see that coming because this is a monthly chart. This is big picture. If we zoom down to the daily, you can see we're on day 13, I believe it is. And just like everything else, this has a cycle to its own, right? And so this is the longest rally in a while. This last one rallied for 7 days. This one rallied for 8 days. So this is telling you we may be getting a little bit of a trend change. The one before that, before this downtrend started, rallied for 18 days. So the way to think about this is when this thing is going down, silver is going up, it's doing better than gold, and generally precious metals are doing better. And so we want to see this thing roll over if you want to get long, if you want to be more aggressively long precious metals. And again, the weekly chart looks like we're also printing a weekly cycle, or it looks like we printed a weekly cycle low. This would be week 3. And so the bull case for PMs would be early daily weekly cycle top. And so we'll be watching this very closely, definitely providing updates on Twitter in real time as we see this kind of develop. The other ratio we want to look at is GDX to GLD. That is just a measure of gold miners versus gold itself. It's a similar thing to gold to silver ratio, except in the reverse. In this case, you want to see this thing going up because you want GDX to outperform gold. It means people are taking more risk because GDX is sort of the riskier end of the spectrum. And again, it's not a coincidence, folks. September, we have a nice, beautiful swing low from September, just like we had the swing low for gold, for silver, for GDX. This is quite bullish. And as I tweeted about, we're having our longest weekly cycle rally in a long time, 14 weeks. And you would expect this would continue to rally as GDX continues to rally, kind of in absolute terms. So we'll be watching for this as well as a really important kind of signal. And finally, the new one that we want to look at is the gold to, or I should say the miners to SPX ratio. Now, this is important because if you think about it, the general investor, the generalist investor, doesn't invest in gold miners. I mean, people might laugh at you in some circles if you say you're invested in gold miners. It's like, why? Like, why would you do that? Right? And so if we see a period where gold miners are outperforming general equities, that's really important to know about. That tells you something special is happening, right? And so left hand side is the gold bugs index, so that's HUI. Right hand side is HUI divided by SPX. These are yearly charts here. Every candle is a full year of price action. And you can see we had this period starting in 2001 to 2011, right? Almost 10 years. That was the big gold bull market, right? So the miners were doing really well in absolute terms, but what do you know? They were also doing really well in relative terms, relative to the S&P. Another way of saying this is if you were long gold miners during this time period, you were making more money than if you had been long the S&P. That's super important to know about, isn't it? But then in 2011, just as we had this swing high on the absolute chart, we had a massive swing high on the ratio chart. So since that period, you have been better off being in the S&P 500 versus gold, right? These are yearly candles. Again, you see these big red years, which means big years of underperformance for gold. So you have this cascade lower on the ratio chart. And then starting at about 2016, you actually start to kind of consolidate. And notice that makes sense because on the absolute chart, that's when the gold miners start to rally a little bit, right? Because they just kind of fell off a cliff for this period, and so did the ratio. But as the gold miners started to rally in absolute terms, really you start to see kind of a bottoming process for the ratio chart. The fly in the ointment is that this is essentially a bear flag, right? It's consolidation, this big thing at the lower end of the range off of this move. So that's not super auspicious. But we also have 2 green years in a row. So this is 2023, and then this is 2022. Obviously, it closes a doji, so not amazing. But you can see that it's obviously relatively rare to have a green year for the ratio, like from this past sort of period. And if we zoom in on the monthly chart, you're going to see it's not a coincidence. It's all connected. We have a swing low, folks. Not only is it a swing low on the ratio chart, but it's a massive bullish outside candle, right? Again, meaning it makes a higher high, or it makes a lower low first, right? Below there, and then it goes on to go green. It flips, it reverses, bullish reversal, and it makes a higher high and closes there. And then since then, just been massive upside. Now, here's the catch. We had this other period where we did that, right? Where this looked pretty amazing. Like, oh, we based here and then now we're breaking out. So we do need to be aware that this could turn out to be a lower high, just like that was of that and that. So you can't get overly bullish here until you see more evidence. But this is a promising start. And again, if you just think about the idea of the general public investing in gold miners. The idea that gold miners have been outperforming the S&P since September, that's kind of surprising, right? Like that's something that doesn't typically happen. And obviously you can see it happen in these other periods. And so we're going to be watching this very closely. Now, as I said, the last thing we want to do is just talk about how you potentially, quote unquote, sell the top. And the principle is very simple. The most bearish thing you can have on a chart is a lower low, right? And so let's look at silver, and we'll look at the last weekly cycle, we'll look at the COVID weekly cycle as our example. So the most bearish thing you can have on a chart is a lower low, right? And if we're thinking about the weekly level, for this we had this huge rally, right? This huge rally, and we then got a high here, and you have to kind of think about how this would have looked in real time, right? So we get this candle here, right? And that's all good and well. It's a big candle, and just for context, these 3 candles are what really made it, right? We rallied 55% in 3 weeks. And so the next week, and obviously this candle looked different throughout different points in the week, but it closed, like it did make a lower low below this low here. It then went on to close higher, right? Like quite a bit higher. I mean, as I always say, lower wick is a rally on a lower time frame. And so we did that. And so you close way below the low, but think about that. The high on this candle was $29,863, and the low was $24, right? And so once we broke below that low of 24, that was your signal, right? Like, or I should say, if you think that's one way to play it, right? Like, I'm out below the low of this. Now, you would have been super frustrated when it reversed on you, right? Like that's what happens when stops get triggered and it goes in the other direction. And then it actually consolidated for what is that, 5 weeks? You see that? Before making that final lower low, and then it actually consolidated a little bit more. But I think generally speaking, you want to define your risk, and maybe that actually is something that happens on the daily level, where if you think about that rally, so this is the daily candle that caused that weekly, that could be your trigger, like below this low here, right? Like that marks your high. Okay, I'm out. So what is that low? That's 27.38, right? Which is obviously much higher than the $24 for the weekly low. And so you want to just pick your time frame and then define your risk, right? Whether that's a daily lower low or you want to give it a little bit more room and it's a weekly lower low. Like that's how you start to conceptualize, remove the emotion, and just make a data-driven decision. Maybe you get back in. I wouldn't be afraid of the FOMO, especially since you're combining the cycles. So you would be doing that on like week 20, week 21. So it's already super late, and so it's like, what are the odds that we're going to rally by too much more? So that's the way that you want to think about it, and we'll definitely be talking about that in real time. Like I think very simply here, if we break below this level here at 23.12. that could open the floodgates, right? So you want to think about your risk procedures there. That could be an option. And it depends on how long you've been, like since when you've been long and what kind of gains you have. But that's how you can start to conceptualize it. We'll definitely walk through much more of that in real time, but wanted to just go through just a quick kind of framework there for you. But we'll leave it at that for this video. We'll continue to watch precious metals and provide updates on this YouTube channel and also on Twitter. Thanks for watching.